It's Tuesday, the 24th of August, 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Sean Aylmer. More than $7 billion in deals announced as the M&A activity in the energy sector escalates. That's our main story. Also coming up in today's podcast, Wall Street surges and oil and gold prices jump amid renewed optimism over the economic outlook. The Prime Minister Scott Morrison calls on state premiers to stick to plans to reopen economies, and cricketer Ian Botham reportedly to be the UK's envoy to Australia. Immediately after the podcast, stay listening for my chat about investing in infrastructure assets. But first, here's a brief look at markets. US equities hit record highs overnight after the US Food and Drug Administration granted full approval to the BioNTech Pfizer vaccine. It's the first vaccine to receive full approval for use in people over the age of 16, and that boosted sentiment about the economic recovery. In early afternoon trading, the S&P 500 was up 1%, the Dow Jones Industrial Average was 0.8% higher, and the Nasdaq had added 1.6%. European markets were also stronger, with London's FTSE 0.3% higher and the Stoxx Europe 600 up 0.7%. It was a strong snapback from trading last week, which was the biggest weekly slump since February. The S&P ASX 200 closed up 0.4% yesterday to finish at 7,490 points. The tech stocks were among the best performers, as were the real estate companies. Consumer staples and energy stocks were among the worst performers. Commonwealth Bank had a good day, pushing back above $100 a share, up almost 1%. Westpac, National Australia Bank and ANZ were all flat. CSL, which last week retook the mantle of Australia's second largest company from BHP, was higher. Sims Metal's share price rose 2% after it announced a $150 million share buyback. The improved sentiment in the US helped push oil prices sharply higher overnight. Brent crude was up more than 5%. The price of gold was also higher, with an ounce of the precious metal worth more than $1,800 an ounce. The Aussie dollar is trading at 72.1 US cents, and Bitcoin breached $50,000 a unit yesterday for the first time since May. The digital currency has been steadily rising in recent weeks, as have other cryptocurrencies, including Ether. Bitcoin is up more than 50% over the past month. There were more than $7 billion in deals in the energy and infrastructure sectors yesterday, highlighting the massive changes going on in one of the most strategic parts of the economy. Spark Infrastructure, which owns electricity assets, agreed to a $5.2 billion takeover by foreign buyers. Ampol said it will pay $2 billion for a fuel retailing business in New Zealand. It caps an incredible fortnight of deals for energy assets. Spark agreed to sell to a consortium including private equity fund Kohlberg Kravis Roberts and the Ontario Teachers Pension Fund. The consortium has been doing due diligence for 6 weeks and will pay $2.95 a share. That's about a 25% premium to where Spark was trading before the bid. Infrastructure assets are all the rage at the moment. They provide long-term, steady income and often returns are regulated and linked to inflation. Sydney Airport is one of the biggest infrastructure assets in the country and last week knocked back a $30 billion bid. Ampol has bid for New Zealand fuel retailer Z Energy just as the last oil refiner in that country is set to close. The deal will allow Ampol to sell refined petrol into New Zealand and provide the group with much larger scale as it transitions to a more environmentally friendly operation, a significant challenge for an oil and gas company. The announcement came as the group, which until recently was known as Caltex, reported a big jump in net profit last financial year on the back of higher convenience store turnover, a jump in fuel sales, and $40 million in government payments. The energy sector is abuzz at the moment. Over recent weeks, Santos and Oil Search have agreed to a $22 billion merger, while Woodside will combine with BHP's petroleum division, creating a $40 billion oil and gas giant. The world is going green, and energy and utility stocks are some of the largest carbon emitters. They're scrambling to remain competitive in the changing world. Infrastructure assets increasingly want to work with renewable power suppliers. But while the push to go green is gathering momentum, people still need to be able to turn the lights on. And many energy assets are relatively cheap. Yesterday's deals won't be the last in the sector. In a moment, the rest of the news you need to know this morning. In overseas news, China claims to have stopped COVID-19, including the Delta variant, announcing 0 new cases across the country. Over the past month, since the arrival of the Delta variant, China has tested populations repeatedly, administering more than 100 million tests. It's quarantined cities and cut off train and plane flights to hotspots. Extreme, but it worked. India plans to offload about $81 billion in state-owned infrastructure assets over the next 4 years to help with its finances, according to media reports. It will include the sale of road and railway assets, airports, and power and gas lines. And the Biden administration is considering extending the deadline for withdrawing US personnel from Afghanistan after ordering civilian airlines to help move Afghan refugees out of bases in the Middle East. United Kingdom Prime Minister Boris Johnson will push Mr Biden to slow the departure of US troops, according to media reports, but the Taliban has warned that any delay will have consequences. Locally, Prime Minister Scott Morrison is putting pressure on state premiers to support the National Cabinet plan to reopen the economy once vaccination rates hit 70% and 80%. The PM said leaders needed to prepare to reopen economies, knowing there are risks involved. He added that this Groundhog Day society many of us are living in had to end. His comments came as the Doherty Institute last night said Australia could reopen safely with several hundred virus cases each day. Victorian Premier Daniel Andrews said the national plan represented hope for his citizens who have endured 6 lockdowns totalling more than 200 days. But the state leader was frustrated with data showing there'd been more than 50,000 unfilled vaccination appointments across the state, much of it due to hesitation around AstraZeneca. New South Wales Premier Gladys Berejiklian said she will outline new freedoms for her state later in the week, based on the 70% target being hit. It will include fewer restrictions for people who have been inoculated. But Western Australian Premier Mark McGowan is sticking to his view that his state will remain closed in pursuit of a COVID-0 strategy. The debate continues as the cases across the country remain very high, with 818 infections and 3 deaths in New South Wales yesterday. In Victoria, there were 71 new COVID cases and there were 16 in the ACT. Around 30% of Australians are now fully vaccinated and almost 53% have had 1 jab. Yesterday, the PM said Australia's 1.2 million children aged between 12 and 15 years should be vaccinated by the end of the year. As many as 7,000 truckies and warehouse workers at Toll Transport will strike on Friday, the first national strike in road transport in more than a decade. The Transport Workers Union said employees will stop work after Toll refused to back down on its bargaining claims, including no pay parity for external hires and cutting overtime for part-timers, according to the Financial Review. Another 6,000 workers are set to vote on strike action at Star Trek and FedEx later this week. The Prime Minister yesterday said Australia's 20-year presence in Afghanistan was worth it, despite the return of the Taliban and the chaos over the past fortnight, where foreigners and locals have been frantically trying to flee the capital, Kabul. Tens of thousands of Australian troops have served in the country, and the PM said rescue missions would continue for as long as possible. The share price of insurer NIB Holdings fell by 11% yesterday, despite the company recording a strong profit after fewer customers lodged claims. The group's health insurance business did well, while its travel insurance and work cover operations struggled. Part of the reason for the health side of the business doing so well was the closure of optional and non-urgent surgery amid COVID restrictions. But NIB will have to rebate customers some of their premiums as a result, and once lockdowns and restrictions end, claims are likely to rise as people return to having surgery. The corporate regulator has criticised the ASX's risk management and compliance practices in an independent report into the stock exchange's outage last November. The new chair of the Australian Securities and Investments Commission, Joe Longo, said it was very disappointing that the ASX went ahead with an upgrade to its trading system when it wasn't ready to go live. The failure was only the 4th outage in 15 years. Sonic Healthcare is a company that's done well out of COVID, and I mean that with all sensitivity. The world's 3rd largest pathology player and top 25 ASX stock said its net profit jumped 150% last financial year. Sonic performed about 30 million COVID tests in 60 laboratories globally. It is now Australia's largest non-government provider of vaccinations. While the result was strong, it was slightly lower than analysts' forecasts, and Sonic's share price fell almost 3% yesterday. But it's still up 27% in the past 6 months. Another company affected by COVID, but for different reasons, is Reliance Worldwide, which manufactures plumbing products. There's demand for goods, but there's also a shortage of plumbers, and global supply chains are suffering as China closes some of its ports. On top of that, copper prices are higher. It means, yep, you guessed it, fixing the bathroom is about to get more expensive. The group's net profit last financial year more than doubled, and its share price yesterday fell almost 2%. Real estate group McGrath said revenue jumped by 1/3 last financial year, and sales over the past couple of months have been better than a year earlier, despite the lockdowns in New South Wales, Victoria and the ACT. Chief Executive Eddie Law said it was amazing, and that's his word, that the real estate sector has been able to trade through the COVID crisis. Certainly there are plenty of buyers out there, but Mr. Law said there is some reluctance among sellers to put their properties on the market. McGrath's share price rose nearly 4% yesterday and is up 120% over the past 12 months. There were plenty of other profit results around yesterday. Outdoor billboard company O-Media said revenue jumped despite airport and office locations struggling. Childcare group G8 Education, which has more than 460 centres across the country, said it made $25 million for the 6 months to the end of June, much better than 12 months earlier. And Julia Michael Hill reported big jumps in revenue and earnings despite retail lockdowns. And finally, according to the Sun newspaper in the United Kingdom, not necessarily the font of all wisdom, Sir Ian Botham, better known as Beefy Botham, has been appointed the UK's trade envoy to Australia. The cricketer, who is one of the great all-rounders, is a regular visitor to these shores, though I'm not sure if that gives him the prerequisites to be a trade envoy. Up next is a daily interview, and today we're looking at infrastructure investing, very appropriate on a day like today. It's no surprise that there's been a rush on infrastructure this year. After all, I've been talking about it for months. Today, though, we take a good look at why so much money is moving into the sector and what the future holds. My guest is Peter McGregor, the co-founder of True Infrastructure. True stands for Transport, Renewables, Utilities, Energy, and it's a fund with a focus on things like wind farms and solar. That's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. It's Tuesday, the 24th of August, 2021. I'm Sean Aylmer, and that was Fear and Greed. Enjoy your day.